Hello, hello, hello. Welcome to my channel, Insurance Lady Info. It's your girl, Sunshine Love, your insurance consultant. Hi, if you're new here, welcome. Welcome to Insurance Lady Info, where you are going to learn tips, tricks, and ways to manage your insurance policy, whether it be auto, home, renters, umbrella, boat, motorcycle, ATV, trailer, etc. I'm here to give you the knowledge that I have obtained over the last 9 years, so that way you'll be smarter when you're shopping for insurance and also when you're managing your policy. So today, I'm actually going to be discussing homeowners. Woo! So we are going to now start moving into homeowners. I am not really fully done with auto, but I think it's time that we move into homeowners, especially because the weather is starting to turn bad and a lot of people are starting to work from home. And you guys need to know how your home is going, your homeowners policy operates for you, especially with the winter months coming along. So let's go ahead and get started. So with homeowners, what is homeowners? I went over what is insurance on my first video, but I'm going to discuss homeowners insurance with you in this video, okay? So with homeowners insurance, it covers your home in an event something happens. It covers a covered loss like fire, theft, wind and hail damage, vandalism. It covers things like acts of nature. If a tree falls on your home, it will cover that. The roof will be covered. It covers if your neighbor, damages your home. It will definitely cover that as well. In some cases, your homeowner's policy will cover if your home is under construction. It does depend on what type of construction your home is under. So mostly like renovations is what it will cover. It covers the people inside of the home. So say if you become liable for damages done to another person or their property and they sue you, your homeowner's policy will take care of that. It will take care of that other person's medical payments. It will also take care of things like if you have to relocate because your house is being rebuilt due to a covered loss. So for instance, if you lost your house in a fire and you have to relocate, you would actually get money from your homeowner's insurance policy to cover you for relocation. Usually that goes up to about 24 months. Some companies go a little bit longer. Some is a little bit shorter. It does depend on the company that you with. So you want to make sure that you ask them questions about that particular coverage. You also get coverage for yourself. For instance, if something were to happen and you are no longer able to do what you usually do around the home, you get coverage for that. Some companies actually give you coverage for that. You also get coverage for things like kind of storage coverage. And that one, I'm gonna actually make a separate video about that, because I want to say when people are moving from house to house or from apartment to apartment, they often ask about the storage coverage. And so I'm gonna actually make a separate video about the storage coverage so you guys will know exactly how that works. But let's just jump into pretty much what homeowners is. So like I mentioned, when you have a home policy, anytime in the beginning, anytime you purchase something of value, you want to make sure you put insurance on it because it is your interest, okay? Again, like I said in the first video, when I said that the person who has insurable interest is the person who can get insurance on whatever property or person that they have insurable interest of. So your home is something that you have invested in, right? So you want to make sure you get coverage on that. Usually when you have your home if it's escrowed, I can't get my words out today. Usually when it's escrowed, meaning you have a mortgage on your home, right? And basically it can go one or two ways. If you get a mortgage on your home, okay, the mortgage company can escrow it to where they pay the insurance in full, and then they actually factor in your insurance with your monthly payments for the house, right? That's when it's escrowed. That's what escrowed is. So if it's not escrowed, that means that the mortgage company is not going to pay for the insurance, right? You pay for the insurance out of pocket yourself, and you budget yourself your insurance with your homeowner's policy. So when it comes to how your insurance gets paid, it can either be paid by you or by the mortgage company. But the person who decides who gets the insurance or what type of insurance you get or what company you go with, that's always on you, the customer. Because no matter what company you go with, the mortgage company is going to give you a budget that you need to stay within, right? And it's up to you to find a company that's going to fit within that budget. Because you and the mortgage company, y'all have discussed what your monthly mortgage rates are going to be, what your monthly payments are going to be, right? And that does factor in your insurance, provided that you get an insurance company that falls within that budget that you and the mortgage company has come up with together. Whatever that figure is, y'all came up with that together, and you said you can afford to pay that. Right now, I'm talking as if this is being escrowed. Okay, so we're going to talk about non-escrowed in a second. But if this is escrowed, y'all came up with the figure. You said you would agree to pay that, but you have to find an insurance company that's going to fall within that figure, so that way you don't blow your budget, right? And they leave that up to you. The mortgage company does not shop around. You really don't want them to shop around for you, because typically they're going to get you something that's going to mostly benefit them than it benefits you. You always want to get your own insurance. You never want to let the entity, and I mean auto, if you're getting a lender or if you have a lender for your home, don't ever let the lender get the insurance for you, because it's beneficial for them. It's not beneficial for you. Okay. Whatever insurance you get is going to benefit you, and it's going to satisfy the lender. So that way you're in compliance with the lender, and you also have coverage for yourself. So keep that in mind, right? So going back to what I was talking about. So when you have your mortgage going on, you have it escrowed, and you're shopping around for insurance, you want to make sure that when you're doing this, you have everything included. Now, a lot of people are not too sure what's really included in a homeowner's policy, right? And really, a lot of homeowners companies, which is almost the insurance companies that sell auto as well, they are actually going to give you the basic, right? It's up to you to make sure that you have everything you need. Now, I'm going to put a pin in that because I want to talk about the non-escrow side, okay? When you are not escrowing your homeowners and your insurance, right? When it's not escrowed, and that means you're paying your home insurance out of pocket, you're paying it yourself, then that budget can be whatever you want it to be. Right? But if you're paying on a house, whether you have insurance, whether it's mortgage, I can't get my words out. If you're paying on a house, whether it is escrowed or not, you need to have insurance on your home. The reason why is because you're paying on the house. Anytime you're paying on something, you have to have insurance on it until you pay it off, and then you can do whatever you want to do after that. So it's not very wise to have a home that you're paying for and no insurance, escrowed or not, okay? You need to always carry insurance the entire time you're paying on that home. Now, once you've paid that home off, you have an option to not carry insurance anymore. Do I advise that? No, because so much can happen. And do you really want to pay that out your pocket? Because let's be for real. 2 years ago, here in Texas, we had a polar vortex. It caused a lot of homes to be damaged. Some people had bursted pipes that tore up their walls. They also had bursted pipes that tore up their ceilings. Some people had bursted pipes that tore up their floors, right? You had water damage all over people's houses, right? All of that, if with no insurance, is going to be paid out your pocket. You're going to have to fix your ceiling. Some people had damaged roofs from the snow, from the ice, from the weight of the snow or the ice, trees falling over, damaging the house. All of that comes out of your pocket if you don't carry insurance. Now, it's only a small percentage of people who can afford to pay for all of the damages done to their house out of pocket. The majority of us don't have that luxury. So although insurance can kind of seem a little bit pricey, not carrying insurance, especially in the winter months, is more pricey. You want to make sure that you are carrying insurance. I do not advise people to go without insurance. I just don't advise that, especially for the house. The car, never, but for the house, super never, because that is your investment. You want to make sure it is protected, and you just never know what could happen, especially when you live in a state like Texas. You know what I'm saying? Because heat can also damage your home as well. So you just never know what can happen, and you want to make sure your home is always covered. So, what comes in a homeowner's policy? Well, let me tell you. So, in a homeowner's policy, the first thing they come across, I'm going to go straight down the list. I do have this memorized. Again, you guys, I've been doing this for years, so I know exactly what comes in a homeowner's policy. The first thing that they always talk about in a homeowner's policy is your dwelling coverage. Your dwelling coverage is how much the house is covered for. So, for instance, if you go through your quote, right? And they say they're going to cover your house for $400,000 on replacement costs. That means that if something were to happen to your home, you will get an updated home, but the value would be up to $400,000 on that rebuild. Now, if it's actual cash value, because some homeowners offer actual cash value, that means that you'll get a depreciated value home up to the limit of the dwelling cost. Okay, so that number is usually calculated by a lot of different factors, you guys. It's not just because a lot of people feel like if they paid $550,000 for the house, then the rebuild should be $550,000. No, that is not the same thing. What your market price is not going to be the same as the value to build that house. It's never the same. Especially if you bought that house and you've been living in it for 10 years, the amount of money it's gonna cost to rebuild that home at replacement cost value is gonna be a whole lot higher 10 years later. Because number one, the cost of lumber always increases. So you have to take that into consideration. The cost of labor increases. You know, the materials used to build your home is now updated if you're doing replacement costs. So you really have to take that into consideration when you're looking at the dwelling coverage. It's never going to be the actual amount that you pay for the home. It's usually higher. Now, I've come across some cases where the dwelling coverage was probably equal, but that is rare. That your dwelling coverage is equal to how much you paid for the home. 9 out of 10, your amount that is going to cost to repair that home is going to always be higher than what you paid for it. Okay? Because again, like I said, we're thinking about to rebuild your home at replacement cost value. Now, if you're doing actual cash value, then you'll probably be able to get it to where the cost that you pay for the house is going to be the cost that it would cost to rebuild. Because at that moment, again, like I said, they're not rebuilding your home with updated stuff. You're not going to get an updated house when you do replacement costs. It's going to be depreciated, right? Because it's not replacing anything. It's just giving you cash back, basically. You're just going to get this back for what you paid for it, but from when you got it. So it's never going to be updated. You're not going to, for instance, if your TV got stolen from your home, because personal property is covered, and you bought that TV in 2014, if it's that actual cash value, you're just going to get the depreciated amount from 2014 until now. That's what you'll get back. If it's replacement costs, you bought that TV in 2014, then they'll give you a 2023 TV. You're not going to get anything depreciated. It'll be a new TV. So in my opinion, depending on your lifestyle, I always go with replacement costs because nobody wants something that old or depreciated. Everybody wants something new, updated, especially if you invested money in it. You want to make sure you have something that's updated. But if actual cash values are options that you can get, and most of the time, actual cash value options are a lot cheaper. The next coverage that you have under the dwelling is going to be liability. Now, liability, it covers you. So just in case, like I mentioned earlier in the video, say for instance, you had company over, right? And your company, they trip and fall and they twisted their ankle and they are suing. And during that trip and fall, they broke their phone. And they had they not tripped on your carpet, they would have never twisted their ankle and broke their phone. So now they're suing you for the medical payments because they have to go to the emergency room and get a boot on their ankle. And they can't work because they are unable to walk. So they're missing work. So they're suing you because something was on your floor, or maybe nothing was on your floor. Maybe they just don't know how to walk, but they was at your house. So it's your fault. They was at your house, it's your fault, right? So they're suing you. Liability covers that. Typically, the liability limits, you can get $100,000 limit, you can get $250,000 limit, you can get $300,000 limit, you can get $500,000 limit, you can get up to $1 million on liability. If you get $1 million liability policy, that is a whole different policy, and we will discuss that later. But let's stick with like the average is normally $300,000. I usually go $300,000. A lot of people do $100K, right? But either way it go, no matter what your liability limit is, if something were to happen in your home and you are technically responsible, because if it's your house, you're responsible. I don't care what happens. They could have did it themselves. They was in your house. You're responsible, period. If something were to happen and you're responsible for that, and they try to sue you for damage done to their person or damage done to their personal property, lost wages, missed from work, medical apparatuses, they can sue you for all of that. And instead of that coming out of your pocket, that's going to come out of your homeowner's insurance. It can also cover things like, say, for instance, you have a child and your child is outside playing catch and they throw the ball through the neighbor's window. Your homeowner's insurance can actually pay for the neighbor's window with the liability policy portion of it. So it covers an array of things, but basically the bottom line is for liability. If you're liable for damages done to another person or to another person's property, then it will cover you for whatever that limit is. Like I said, there are different limits. You can choose which limit is best for you, but that's what it will cover. The next coverage that we have is for other structures. So other structures is things like a fence, a gazebo, a carport. If you are renovating your home and you have like the renovation construction items sitting on your property, a well, some people have like wells and figurines in the front part of their lawn. All of that is other structures. Okay. All of that is other structures. That's all covered under your homeowner's policy. Okay. Usually it's covered at a percentage of the dwelling amount. So if your dwelling amount is $550,000, your other structures is usually covered at a percentage of that amount. Okay. And it can pretty much cover up to that limit. And it only covers just that, right? So we're not talking, the roof is usually covered under the dwelling amount. Okay. So if the roof is damaged, that's going to come out the dwelling amount, right? If the house on the outside is damaged, that's going to come out the dwelling amount. If the fence is damaged, that comes out of other structures. If your gazebo gets damaged, that comes out of other structures. If your carport gets damaged, that comes out of other structures. If your detached garage gets damaged, that comes out of other structures. Those are all other structures. So other structures is typically if you have something that is not attached to the home, outside of a fence, but a part of the home. It's a part of your home, but it's not necessarily attached. Like it's not bolted down to the house, right? That's typically what other structures cover. Next, you have personal property. So this is how I always explain personal property. Because whenever I am helping my customers shop around for car insurance, and I ask them this question, it usually trips them up because they don't never really know what to say. This is the best way to think about when personal property when you're shopping and you want to think about what you're covering, right? So this is how I ask them the question. I'll say, considering everything that you have in your home, if you were to take your house and flip it upside down, right? Everything that is not nailed to the ground is going to fall out. And you look at everything that falls out. That is what you're covering. That is all personal property. So like I just said, everything that falls out the house is all considered personal property. See, most of the time when you ask them, hey, what do you want to cover your personal property for? They usually think of things like TV, jewelry. Nah, baby, TVs, jewelry, clothes, shoes, silverware, plates, your little trinkets that you pick up every now and then from the thrift store or from the antique shop, your pictures on the wall, your decorations in your home, okay, your furniture, all of your furniture, you know what I'm saying? Your plants, if you have plants, your plants, your valuable pieces, your everything, your blankets, your towels, everything in your house that falls out is personal property. You want to make sure you cover yourself to where you can have coverage for all of that, right? You want to make sure you have coverage for all of that. So usually I always tell my customers, hey, I try to get them, hey, go to 100,000. We live in 2023 where bread can go up to $7 and $8 a loaf. That's why I make my own bread, because I'm not paying that. But we live in 2023. I feel like under 100,000 is just not enough. I mean, unless you want to live off, if you're okay with living off bare minimum, fine. But you want to live a comfortable life, you might want to go higher than 100K, but 100K at least $100,000 for personal property. Again, nobody really knows how to answer that question, but I mean, in my opinion, at least 100K. You can buy yourself some new TVs. Everything can be brand new. It's all replacement cost anyway, right? If you have a replacement cost policy. But generally, you want to kind of make sure that you're covering everything you own. It's not just one or two or the important things. It is everything you own. And if you have valuable things that you have gotten appraised, things that you hold near and dear, like family heirlooms, you have a gun collection, a stamp collection, a coin collection, you have jewelry, like really precious jewelry, you have fine art pieces, because trust and believe, baby, my art pieces are definitely covered under a special policy, because I'm not having that. Something happens to these art pieces, these are expensive. And something happens to these art pieces, I want to be reimbursed. I'm not going to be walking around here and not have this covered. Are you serious? Yes. And this is covered under my renter's insurance policy because I don't have a house. But we'll get into renter's insurance in another video, and I'll tell you how that works. But as far as house goes, anything, right? You have something of value that you wanted to make sure that it gets covered under a special amount. So for instance, this necklace was like a tennis necklace. I don't really know, but it's like a 14 karat diamond necklace, whatever the case may be. I don't know jewelry talk, but say for instance, it's like really expensive, right? And I got it appraised for $20,000. And I want to make sure, I probably got insurance on the necklace itself. But you can never have too much insurance. So I can actually add this to my homeowner's policy for the $20K. All I need is to turn in is the appraisal document. And this can be covered under my homeowner's policy for the $20K. That would be separate from my personal property amount. Because my personal property amount would be something like $100K, right? And if this gets stolen, they're going to give me $20K just for this. Right? They give you things like if you have furs like, a mink coat, things like that, you get coverage for that. If you work from home, your business property is covered. What else is covered? I mean, it's so much is covered under a homeowner's. There's coverage for the fire department. If the fire department comes to your house, they usually charge you for that. There's actually coverage up to $500 on most policies for the fire department. I mean, I didn't know they charge you until I started selling insurance. I was like, what? They charge you? They charge you. They actually charge you. So if you have a fire at your house and they come put that fire out, they're going to charge you for putting that fire out. So your homeowner's insurance actually covers you for that. You have coverage for your water damage. Now, water damage does not cover the bursted pipes and the bursted, in the commode. that overflows. Because like if your commode overflows or your pipes burst, you know, you're going to have all that little nasty, yucky sewage water all touching your stuff, just touching all your personal property. Ugh. Right? But your homeowner's insurance can actually cover you to replace your personal items that water damaged. See? Water damage. Now, the pipes is not covered under homeowners. That's usually covered under your home warranty, right? But like I said, you can have insurance. The water damage will cover anything that was damaged by that nasty, yucky, stinky sewage water. Okay? That's what water damage covers. Also, what else you have? Oh, you have food spoilage. So like for instance, when we had that freeze and we went without electricity for a week, a lot of people food had spoiled because we didn't have any electricity. Well, your homeowner's policy and renters, again, I'm gonna get to renters, but and renters actually offers you coverage for that. So you can go back and go grocery shopping and replace the food that got spoiled. Usually you get $500 coverage for that as well. So that's also included. Now, there are a lot of different endorsements you can add to your policy, and there are some that that's needed that even though you could take it off, you probably want to keep it. Like in Texas, we have a wind and hail. In some parts of Texas, it's mandatory. Like you have to carry wind and hail. And in some part of Texas, it's optional. But I wouldn't advise not carrying it because we have a bunch of hailstorms here in Texas. So you want to carry wind and hail. Now that deductible is typically higher, but it's still, we have tornadoes here. Okay. We have tornadoes here. We have hurricanes here in Texas. Like in South Texas, if you live out in the Houston area, y'all mandatory wind and hail. There is no way around that. Y'all are mandatory wind and hail coverage. You have to have it. Y'all have way too many hurricanes to not have it. And y'all also have a tropical cyclone coverage as well. The cyclone coverage covers like the hurricane and tornadoes. Y'all have a separate. Like up here in Dallas, we have a wind and hail, but we don't have the tropical cyclone coverage. But the Houston area and Baytown area and the Galveston area, the Corpus Christi area, the Brownsville, Texas area, they all have it. Beaumont, Texas, they all have that coverage because they are closer to the Gulf, right? So it does depend. With Texas being so big, there's so many different coverage options as far as, you know, it depends on what part you live on, right? Texas is huge, right? Because in the Lubbock area, Texas, they have to have wind and hail because there's a lot of windstorms there and there's a lot of hailstorms there as well and tornadoes. So like I mean, it does depend on where you live, but that is sometimes in some areas it is optional coverage, but in most areas it is not optional. But I would not exclude that endorsement if I were you guys, right? That's an endorsement for the most part. So when it comes to homeowners, like I said, the mandatory coverage that you get is always going to be liability. That's mandatory. Personal property, mandatory. Other structures, mandatory. Loss of use, which is when I say when you relocate, they give you money for that, mandatory. Those are mandatory, right? You have optional coverage that I always add, water damage. It's not mandatory, it's additional, but I never leave it off. I never leave it off. The fire department is a mandatory coverage as well. City ordinance is also a optional or an additional coverage, but I always add it because you just never know. What the city ordinance and law coverage is typically if you live in an area, most of the time HOA, where you know you have to keep your home compliant. And say, for instance, the city comes around, the city compliance, the code compliance comes around, and they say that your house is out of compliance, right? And you have to pay money to put your house back into compliant. Well, you have coverage, right, for that in your homeowner's policy, so you don't have to pay for that out of pocket. That's what that covers. So I usually always put that on there, but that is an additional coverage you don't have to have. Jewelry and furs, that's usually mandatory because they always give you a blanket of $2,500. If you wanted to be more specific about how much your jewelry is going to be covered for, or your furs, or your gun collection, or your stamp collection, or whatever it is, you do need to speak to your insurance agent and let them know, hey, I want you to cover it for this amount. again, if you have something that you want to be, if you have appraised, right, and you want to add it to your policy, you do have to turn in an appraisal document, and that document will have you allow the underwriting department will allow you to cover it for that amount that's on that document, right? And it's only that specific document. Now, as far as how many appraisal items you can add to your policy, you would have to discuss that with your insurance agent, because that's usually based on the company. They do have a limit on how much they will cover for that particular coverage, but you want to make sure you ask questions about that, okay? So, yeah, this is basically the gist of homeowners, like what it is, what it covers. I just basically want to kind of give y'all the gist of what it covers. As you see, this is already a long enough video already, and we're not even we barely even got into homeowners. I just told you what it covers, right? I didn't even give you details on how each of them work. I just kind of broke it down. So I will make other videos about this, because this is the intro to homeowners. So, just, kind of be patient with me as I make more videos and tell y'all more about this, so that way you guys can get smarter on homeowners. Thank you guys for watching. Thank you for paying attention. If you like this video, do me a favor, hit the like and the subscribe button at the bottom. Also, go ahead and leave me a comment. Tell me what you think about the video. Tell me what you think about what I said. If you have specific questions, go ahead and comment that below at the bottom so I can read them and make sure I address them in another video. Again, I am a licensed insurance consultant. I do help people manage their policies. I also help them shop for insurance if they need it. I also do policy reviews for you as well. So if you would like my services, go ahead and contact me on www.insuranceladyinfo.com, and you can schedule yourself a consultation. Also, my phone number is at the bottom of the website. So if you prefer to call me or text me, you can definitely do that. I do answer my phone to my customers, and I will be happy to speak with you over the phone. You guys have a wonderful rest of your day. Thank you for tuning in. Bye.